Guys, the podcast, and thanks for following us. As always, we encourage you to like, share, and follow because in some small way that helps us gain more traction and become a bigger impact in the community. Today, I am here with, I'll let everyone introduce themselves, but go ahead.
Johnny Flores.
And Johnny, what do you do?
I'm the general sales manager at Inside Car Guys.
The GSM at Inside Car Guys.
I'm the GSM.
He's also wearing multiple hats. So,
I was gonna say what title do I use?
yeah. So he's also like the finance director, and today we're going to be talking about financing and the importance of credit. And we also have a couple guests with us.
Hello, my name is Israel Olmos, here with Reliance Wealth.
Reliance Wealth. Okay, awesome. And
my name is Vivi. Hello, thank you for having me. I own Campbell Solutions, which is a credit repair company, and I have partnered with Reliance Wealth.
Awesome. So what does Reliance Wealth do?
Well, when it comes to it, 85% of Americans struggle with credit. So we help improve people's credit scores.
Wow. Okay. Yeah. And that's actually a big number. I never thought it was going to be that high. You said 85%.
85% of Americans, yes.
Wow.
What does that mean when you say 85%?
Well, they usually have some sort of either collections or something in their credit history that is kind of affecting them in some way, and people don't realize that.
Usually in a negative way?
Usually in a negative way, yes.
Wow.
So a lot of people's credit report, they actually owe the debt. Most people with credit issues owe the debt, but with the American Credit Act, FAIR Act, you're entitled to a fair credit reporting history. So everything has to report accurately through all three bureaus. So the three main bureaus, Equifax, Experian, and TransUnion. If, for example, you have an open account and it's showing a wrong balance on Experian and showing a different balance on TransUnion, they have to remove that or fix it.
Oh, wow.
You can actually sue the credit bureaus and that company for not reporting it properly. And a lot of Americans don't know that. That's why about 80 to 90% of Americans have something negatively impacting their credit report. And not enough of us check and monitor our credit score until it's too late, until we're ready to go buy a car, refinance our home, or purchase a home. A lot of people don't know that. My husband is active duty military. When he went to go to rank up, they ran his credit report. And because there was inaccuracies in his credit report, he couldn't get the security clearances. So it impacts a lot of things that people don't tend to look at.
I've heard of that with jobs.
Yes.
Yeah, jobs.
I mean, jobs, insurance, apartments. It affects all of our daily activities. It affects. I mean, if you want to buy a car, if you want to buy car insurance, if you want to get a phone, they run your credit.
Yeah.
And so a lot of people don't know about financial literacy. And that's what we are doing, and we're trying to impact the community, especially the Latin community. We are taught, my grandmother had money under her bed. She didn't believe in banks. Banks are going to rob us. Banks are going to do this. And so our theme is to help our community understand the importance of financial literacy before it's too late, right? I remember getting out of high school and I went on a college campus. There was a tent for Discover, for this. I was like, oh, cool, free money. I didn't know anything about credit, right? So I was going and shopping and thinking I was, balling. And then, here come these bills and I don't know anything about it.
Wow, that's amazing. So you actually go beyond just helping people fix their credit. You help them understand what credit is.
Yes, you have to, because without knowing one or the other, you're gonna fail. I can fix somebody's credit all day long, but if they don't know how to maintain it and what it actually is, it's gonna repeat the same cycle over and over. And one of our biggest things too is to get it out into the community, into schools. They teach home ec. Why can't they teach a financial literacy class? Mm-hmm. A lot of people don't know how to balance a checkbook. My husband works with recruits coming into the military. They don't know how to balance a checkbook. you know,
And that's important for credit.
Yeah, no, it's really
if you-
important.
yeah, I mean, people are just handing out loans, especially for military. They look at it as a secure job, so they'll get finance for a vehicle, they'll get finance for all these credit cards, but they don't know what to do with it. So if they're not financially educated, they're not going to know, and they're going to get into these cycles where they're paying, 20% on a car.
What would you say, and just for my curiosity, what would you say the average customer or average amount of people are behind on like auto loans or have a repossession on their credit?
So in 2025, the statistics show that it's about 60 to 75% right now that have recently gotten either repossession or have fallen behind more than 60 days.
to 75%.
Yes.
They're either repoed or 60 days behind. So they're about to be repoed.
Yes.
Oh my gosh, that's crazy.
Yes. And it's all due
What was it the years before?
So it ranged anywhere from 40 to 30%. Just in 2025,
So it's almost doubled.
It's doubled.
Wow.
It's doubled, and they are predicting that in 2026 it's can go even up to 80%.
Do you think it's because of just the economy, or remember back in like 21, 22, the prices like skyrocketed for vehicles because of I remember when we were at Toyota, I mean, the cars are going for thousands over MSRP.
Yeah. So I think it's a combination of both. It's the economy, but it's also not understanding finances. People make really good money, but they spend it on, the newest iPhone, the newest Jordans. They don't understand the value and understanding how to work credit, right?
Wow.
You can build and stack cards, you can build your credit and finance your next home, but people don't have that education behind them, right?
Yeah.
And you purchase. My idea of financial literacy is get yourself in a home, then you stay in that home for about a year, 2 years, pull the equity, and you go and buy an investment property, or you go and pay your car cash, and then you're building that equity off your home.
Do you listen to Dave Ramsey?
Sometimes I do,
Yeah.
but I don't follow. He's more on the thing of no credit.
Oh, okay. Yeah,
He doesn't believe in credit.
like
He says if you have cash, you pay it by cash. If you don't have it,
Yeah.
you don't need it. And I do agree that works for some people, but most of Americans want to live that American dream. And unfortunately, that American dream is built on credit. I don't agree with the credit process, right? Because I think it's unfair.
Yeah.
But it's a way that we have driven and how we've succeeded. And so we have to teach people how to make it succeed for them.
Yeah, I mean, I've even heard of a lot of the bigger car dealership and the franchises getting sued or in trouble for, especially the ones that do their own like credit for predatory lending practices. And it sucks because it's like people are desperate for a car. So they're just focused on, okay, I could pay $500 or $600 a month as opposed to renting a car for $1,000 a month or taking an Uber everywhere. So let me do that. But then they're paying double or triple for the cost of the car over the long term. And I was gonna say with the COVID thing, we had a customer recently, man. This guy owes $30,000 on a 4-year-old Nissan Sentra.
Wow.
What's that car? That car's worth like what, $5,000 maybe?
If we're lucky. And that's not the first one I've seen. I saw a person, they paid like 30, they owed 22, and the car was worth like $3,000, $4,000.
Is that
That's
because
ridiculous.
they traded in a car? Or
No,
that's because
no.
of the interest rate and their poor
Interest
credit?
rate,
Yeah.
poor credit, everything. It all stacked up. And then the car sold when it's new, the banks would essentially allow a higher loan to value on the vehicle. So they
Right.
were able to stack on not only the price, the sales tax, the license, plus warranties, etc., on top of that loan. So they're financing like 125, 130% of the retail value of that vehicle.
As opposed to the invoice. Yeah.
Exactly.
Yeah, so in the car world, like, you have Kelley Blue Book, right? There's a lending value, which is usually 20% ish less than retail value. So if a car lists for $20,000, it might have a $16,000 lending value, and banks will approve people at depends on their credit. If they have really poor credit, 90% is what I've seen. and even really good credit, like 120, even 140% if it's a credit union, off of the lending value. Or if actually credit unions go off of retail value. So they go off of the higher value and they go higher. And then some dealerships like Nissan, I've even seen this at Toyota, they'll go up to 200% of the value of the car. And that's the quickest way to get in trouble. You know, imagine buying a car that depreciates 25% the moment you drive it off the lot.
Yes.
And you owe 200% of what the car was worth to begin with. So now you're in big trouble.
Well, yeah, part of that is they'll use like the sales tax license and registration as, you know, their base loan to value ratio. And then people add on warranties and gap and tires and wheels. And some of the banks like Toyota, they won't add that to, they won't hurt the loan to value. Even though it's in your loan and you're financing it, it doesn't affect the loan to value. So you could add on a $10,000 warranty in some scenarios and be financing $10,000, paying interest on it. And now, you're upside down in the car dramatically.
As soon as, I mean, even before you
drive it off the lot.
But here's a trick for everyone listening, right? A lot of people don't know this. You can cancel your warranty at any time and get a prorated refund. So for example, if you buy a car for, let's say $15,000 and you end up paying like $3,500 extra for a warranty, you can cancel that warranty and that comes off of the loan.
Oh, really?
Oh, wow.
So,
I didn't know you can cancel that at any time.
So we've done that a lot with trade-ins where we're like, oh, you owe 20 grand, but there's $5,000 worth of cancellables. Yeah. Now you owe 15,000.
Okay. Yeah.
Oh, wow.
And we get people out of cars that way that they were otherwise hopeless on, or they went to like several other dealerships and they don't even go that deep or they're not that creative. And they're like, yeah, there's nothing we can do for you. Your car's worth 12 grand and you owe 20. Well, now it's worth, 12 grand, or we always pay more for a trade-in. So we might give them 13,000 for the trade-in. Yeah. And now you owe 15, so we always go that extra mile and get above and beyond, especially Johnny's really good at that.
I always ask to see their contract. I've never seen a finance manager do that in the 20 years I've been doing
manager.
it. Or anyone. Yeah, I'm like, let me see your contract.
I've had some, and I've bought in plenty of cars, and I mean, I've never seen that.
No, I went as far as calling the dealership that they bought the car from. He's like, I don't have it. And then I've uncovered, I can't tell you how many scans the dealership pulled just from seeing their contract. I'm like, wow, I didn't even get away with this. Yeah. And then dive in hey, how much do they owe on the warranty? How much is going to be prorated? So we could calculate that and help them get out of the car.
Well, yeah, I mean, actually one of the services we offer is to review your deal. So if you're already set, I mean, we're an auto broker as well. So we find new cars for people and we get really good deals for people on new cars. But if they're already more than halfway through the process and they're about to sign the paperwork, we will review their deal for them and see if there's anything that shouldn't be there.
Yeah. Anything kinky, or they're paying too much on the interest, or whatever the case is. Yeah. Because we've done it, thousands of times. So we know every little piece to look for when buying a car, selling a car, etc.
Yeah, kinky's a fun word. It means something different in the Midwest where I come from. But when I got out here, everyone's like, "Oh, this is a kinky deal." I was like, "What you mean? What kind of what's that? BDSM or whatever?" What does this have to do? What does one have to do with the other? And then I started putting two and two together. I was like, "What kinky? Where'd that word come from?" Another one is flip a bitch. I never heard that till I moved to California. Really? It means take a U-turn. Yeah. Oh, you guys know. Yeah, you're from California. Yeah. So I'm like, what the heck? They're like, flip a bitch. What kind of
How do I do that?
What are you guys on? So I was like, all right, this is all this new slang. I'm from Milwaukee, Wisconsin.
Oh, okay.
So you guys know a little context and backstory. But yeah, I moved here in 2009, and I've been in the car business 25 years. Oh, wow. Minimum. Maybe a little bit longer. What year is this? 2026 now?
Yeah.
Happy New Year!
Yes.
Yes.
Oh yeah. Happy New Year to everybody. What's today? The 3rd? Yeah. Today's the 3rd day of the year. Let's talk about our New Year's goals. What's our goal for this New Year's? What's your resolution or goal, or what do you want to accomplish this year?
So for me is to try to balance business and family. I don't do that well.
That's an amazing goal.
And
I wish you very well on that.
Thank you.
Yeah, I hope that works out great. I mean, that's also one of my goals. So, and what's your goal?
For myself, to help people.
Help people?
I've been really kind of manifesting and leaning towards helping people.
Like help more people, right? Because you're already doing it in your space. But yeah, that's great. So how many people do you want to help this year? Put a number on it.
There's no number on it. As many people as I get to is the more the better.
Awesome. Yeah, I love that answer. I mean, my goal, one of my business goals is to, we sell about 50, 60 cars a month. I want to get to 100 cars a month.
Wow, that's amazing.
So that's one of my
50,
business
60 is
goals.
already amazing. But yeah,
that's a big number. Yeah.
It's a lot of work. It's fun. I enjoy every moment of it. I mean, 7 hours a day, 12 hours a day, 7 days a week. Yeah, 12 days a week, 7 hours a day.
Yeah. I was going to say 7 hours a day.
I was like, oh, wow.
I think that's your day off.
Yeah, I work half days, 12 hours a day. So what's your goal, Johnny?
To be efficient. Try to maximize everything. So that way, work life, family life, like being efficient and knocking out, goals effectively.
He's got 5 kids. Can you believe that?
Oh, wow.
Yeah.
5 kids.
5, yeah.
Yeah, I have 4.
How old are you, Johnny?
37.
37. I thought you were 33.
No.
When I met you.
I just lived 33.
Yeah, when I met you. Yeah. This guy's got 5 kids. A couple of them grown already. It's almost an empty nester.
One just bought a car from us.
Yeah.
My oldest. Actually, one thing I did for her is I added her to my credit card when she was 13 as an authorized user. And then when she turned 18, she 700 credit score right off the bat.
And that's what a lot of people don't realize, that's how they set up their children. I set up my children that way. My grandchildren, we're going to do the same thing, because if you can get them at 18 and show them that responsibility.
Oh, yeah.
Because if you just let them go, my youngest thought it was, oh, cool, I'm on my mom's credit card. Let me go, use it. I had to stop her.
Oh, no, I didn't even give her my credit card.
Well, see, Mom, I made that mistake, and it cost me.
I was like, look, I got you a credit card. She said, oh, cool. I'm like, it's not.
And I should have known better, but I like to spoil my children, and I work really hard, and we want them to have more than I did, but I reeled that in really quick. I'm like, no, we're not doing that.
Actually, I think having as little as I did growing up is what made me as successful as I am and work as hard as I am to kind of get where I'm at. Is because I do want my kids to have more than I did, but then it has to be a balance. I have great friends of mine. They're great people, but they give their kids the world, and I see the difference. Like, they're still paying for their cars and doing all this. I'm like, my daughter paid for her own car now, and with her own credit, right? I set her up, and I showed her how to do it, and explained every bit of it but a lot of people don't have that experience. Like,
and it's hard to find that balance, because I was a single mom for a long time. I raised my 3 daughters, so I did it out of guilt, right? Because I worked so much that I gave them so much. And then I started to see how entitled they were. And I'm like, oh no, we're not doing this, And I mean, at 16, 17 years old, they're throwing and I'm like, I'm sorry, I did you a disservice.
Right.
Yeah.
And so I had to not parent from guilt and realize that even though I may not be giving them what they want, I'm giving them what they need.
Absolutely.
And so it's made them better. But I had to learn that the hard way, because I parented from guilt. I gave them everything because I worked so hard and so long away from the home. And but you live and learn.
No, absolutely. We see it every day. I mean, we have young kids come in here and try to get a vehicle, and they want, they're like, I got to have this BMW. And we're trying to coach them and
their
help
budget's
them.
a Toyota Matrix.
Or
Corolla.
Or a little Sentra or something. Yeah, we don't carry Sentras.
Yeah, I got a $3,000 budget, and I want that 2020 BMW over there.
Yeah, and we try to walk them through. Okay, this is step 1. This will be step 2. And we've done it with multiple people, like countless people over the years, but. That you could tell when how they were brought up, like, I gotta have it or not. It's just
Yeah, I think our toughest objection to overcome is just it's always been credit, right?
Yeah.
Someone comes in and the banks we use, we've actually collected a lot of banks since we started. In the beginning, we only had like 1 or 2 banks. Now we have probably a dozen of them, and they're all. I mean, a lot of them are really good banks. So there's a lot of flexibility, but still, the biggest problem remains is someone's credit qualifies them for car A, and they want car B, and it's like
that's not how it works. Yeah,
exactly.
That's where the education
or their budget.
Yeah.
They want to be $300 a month, and because their credit's low,
exactly.
and I always tell people, I'm not the one giving you the interest rate; it's the bank. And here's something for the viewers to chew on. It's common knowledge, but a lot of people still don't know. When you go to a new car dealership, they could get an interest rate of 10%. They'll mark it up to 2.5 points, so they could sell it to you, the customer, at 12.5%. So you always want to shop around. I always tell people this: shop around and try to get your best rate before you go to a dealership. But also negotiate the rate. At a dealership, you negotiate the price of the car, the rate, and the monthly payment. And the way that they make the most money is they trap you into just negotiating the monthly payment. And that's the biggest profit way to make a profit at a new car dealership is get a customer stuck on the monthly payment, and then they'll send it back to finance with what they call a leg. It's illegal, but they do it. I mean, every dealership does it. The payment could be $400, but they close the customer at $500 a month, and then the finance manager bumps the interest rate, adds warranty to it, and et cetera, et cetera. And then next thing you know, the customer's like, "Hey, well, what if we make it 501? Would you take the warranty and all this stuff?" For you're like, "Wait, you're gonna give me like $8,000 worth of extras for $1 a month? I'll take it."
Yeah.
Little do you know, you've already been sold on everything $100 a month.
Yeah.
So I encourage people, and I put this on my website, a finance calculator. So you can go on my website, my main website, and type in the number, the price of the car, the down payment, and the interest rate. And then what your monthly, and then the term. And what your monthly payment should be. So if the dealership's telling you more, then they're doing something, sleazy. Yeah. What made you decide to start your company?
Well, a little bit about myself. I grew up in Oxnard, went to Pacifica High School in Oxnard. Nice. And, like Vivi was saying, I was never really taught financial literacy, so graduated high school, wanted to get a car, didn't have the credit for it, as you guys experienced. So once I went to the dealership wanting to get my car, I was getting 15% interest rates, it was not, I didn't have a cosigner. So I was like, I didn't have any money for the car that I wanted, no credit history. So, so that's why I kind of started this company. That's why I've partnered with Campbell Solutions here, and to help people get kind of what they want. Okay. And the main reason is, to make sure nobody goes through that same situation that I went through. And also we're bilingual, so I want to help out the Hispanic community as well. Campbell Solutions here, we're both bilingual, so we kind of help out and kind of combine 2 and 2 together to help both communities. Yeah,
the Latino community is actually, I think Toyota was actually sued because the rates, they went through and looked at the rates with the Latino community, Spanish speakers, and they were significantly higher than English speaking or other ethnicities. Yeah. So I don't think it's necessarily them discriminating. I just think because of the lack of education for the credit situation, they just don't know any better, right?
Exactly.
They walk in and they just don't know, and they want to get it done, and whatever it takes to get a car, because for the most part, when they're going to look for a car, especially us, and it's a necessity. And so we just, they're not going to do us wrong, and we believe, and we sign on the, on the dotted line, and we go.
And you're focused on the monthly payment, right?
Yes. Yeah. And you're focused on the monthly payment. You're focused on the fact that you think that this person is going to do right by you.
Yeah.
And, that's why I love this partnership with Reliance Wealth, because we're really wanting to help. And also, partnering with you guys and being able to help people, get them a great rate for their vehicles, and also look at their credit profile and let them know, hey, maybe you're going to be at this interest rate, but in 6 months we can refinance you and get you in a lower payment, or even your next step in vehicles, right? You got to start at one place and we can go to another.
Yeah, I've always been big on refinancing. So for a couple years, I worked at not even a couple years, it was a few months. But I learned how to do financing in the car business by actually working at a call center that did nothing but refinance auto loans. So people would call in and they did a lot of advertising, and they'd tell us their auto loan. We'd take a credit application and refinance them. The good thing about refinancing a car you already own is you don't have to pay sales tax on it again. And, one of the good and bad, right? The bad is the loan starts over from day one.
Okay.
So you could be 3 years in your loan, but you could also cut your payment in half, cut your interest rate in half, but you're starting over from day one, which, is good and bad. You always have the option to prepay the car or pay the car off early. But the refinancing is a big thing. And I always pitch that to all of my customers, because unfortunately, they have a lot of customers don't have the best credit, and they get the highest interest rates.
Yeah, it would be far and few between that I'd see somebody with a 29.99% interest rate. But nowadays it's common with the credit and the lenders. 29.99. When you hear 15, you're like, oh, I got 15. I'm like, wow, that's actually a pretty good interest rate nowadays. Like before 15, it's like people would never buy a car. If it was in 2.9 or 3.9, it was like, oh no, that's outrageous. But interest rates have crept up and they've stayed up over the years. And with older used cars, they're going to be higher. It's a higher risk for the bank. So
what do you guys recommend for refinancing? Every 6 months? Or in 6 months? Or?
The reason why I don't recommend refinancing at year 3. Okay. I think it's almost smarter to finish paying off the car because they amortize the interest at the beginning of the loan. So you're paying, like, say your payment's $500, $300 of that payment could be interest, $200 principal. That's why at the beginning of your loan, you see the balance go down slow.
It's almost like 90%. Your first payment on a car payment, almost 90% of that's interest. But then it flips on your last payment, 90% of that's principal. So, it's kind of upside down. They collect all their interest up front. Wow. So the amortization is big. And I mean, I've been looking at like mortgage calculators lately because I want to buy a house. But yeah, they have the amortization schedule, and it shows you what you're paying in interest in year 1. Yeah. Which is always a lot more than what it's most of it. Most of it goes towards interest in year 1. But yeah, that's a good point. So yeah, there's good and bad. And that's one of the bads with refinancing your car later in the loan. But if you're like struggling and you need a lower payment, then sometimes you have no choice. But with a lower rate and a smaller amount, the total amount of interest is much, much less. So, I mean, we get customers, sometimes they come in and they're like financing $8,000 and they see a 12% interest rate and they start freaking out. And I'm like, well, this is an old car. So the banks are looking at that. Your credit's not like perfect, you're like in the mid 600 score range, and most banks won't finance it, but 12% versus a 10%, you're talking maybe $200-$300 depending on the term of the loan. But what I found too is with those smaller loan amounts, those older cars, banks will do like a 36-month loan versus a 60-month loan. So the term of the loan, the size of the loan, and then that impacts the rate greatly. So for example, on a house, if you're buying a big house, like $1 million house, 1% interest rate is almost $1,000 a month in extra payments. You know, so going from like a 5 to 6%, but a 1% interest rate on a $8,000 car, that's $5 a month.
Yeah, it's a big difference.
You know, so it does, and I explain that to people too. You're paying like $700 total in interest. And,
Yeah.
you know,
That's a big difference. The size of the loan matters. And that's why, like, when you're buying an older car and it's a small balance, I mean, the interest isn't that big of a factor. Like with the house, that when I refied my house, I remember like, oh yeah, we want to refi you, qualify for this. And there was a quarter point difference. And like quarter point, like I'm used to, you know, car finance. It's not that big of a difference. And like, no, it's like $55,000. I'm like,
oh, wow.
What? Did the math? I saved a quarter. So once I learned that, I went from like I started out like a 4% interest rate on my house, and then now I'm down to like a 2.99.
And that's
after
a big
couple
deal.
of
That's an
refinances,
amazing, yeah,
right?
that's an
And so I'm like,
amazing
I'm locked. I'm not ever
got those
messing with
golden
that.
handcuffs.
Yeah, you're like, I am never
Yeah.
refinancing
So no,
again.
now at this point, it's pay smarter. Because
Yes.
since the rates, you know, as good as it's out there right now, it's about
best
paying
it's gonna
smarter.
get,
Yeah, absolutely, especially for the time being. So
Yes.
Yeah, I've been looking lately, and they're giving me like 6%, 6.85%, and I'm like, man, that's a lot. But
Yeah.
then
It is.
I'm like, okay, when I refinance it, I'll save $2-3 grand in a couple years if the rates continue to go down.
It depends on how you're able to pay it. So one thing I advise with people, as opposed to maybe refinancing, because that might not even make sense, is just pay it smarter.
Yes.
People don't realize that every day they have a loan. So say your balance is 10K, all right, principal loan. Every day that you have that 10K balance, there's a per diem. There's an interest charged every single day
On the remaining principal.
on the principal balance. So if 1 week you pay $200 towards your principal goes down, the next day after that hits, you pay down your principal, the per diem is less. So it might be $3 a day, $5 a day, but you pay a $200 payment a week, and then the next week you pay another $200 payment.
Yes.
It keeps going down, so your per diem keeps going down. So I advise doing split payments
Yes,
throughout
everybody wants to pay monthly.
Yeah.
But if you split it up,
Smarter.
even with your car, even with your credit cards, people don't
Everything.
understand that it's not the due date. If you pay by the statement due date,
Yep.
it reports to the credit bureaus. The due date doesn't matter. You need to pay it 3 days before the statement due date.
Oh, yeah.
And always with your mortgage, like you're saying, you split it up.
Split it in half.
Because, or even in half, sometimes I'll do 3-4 payments. If I can do
Right.
it weekly,
Yeah.
I will do it because at the end, you're paying less interest.
Exactly.
You know, and that goes for everything. Your car, I pay my car not monthly. I pay it twice.
Yeah,
My husband
break
gets
it
paid
in
on the
half and
1st
half.
and the 15th, and that's how I pay it.
Wow,
All my
that's
bills.
that's actually how I advise.
Yeah.
For people to pay it. It's like most people get paid every 2 weeks or twice a month
So
anyway.
make a payment
Exactly,
every
Yeah.
2 weeks.
So if you have a $500 payment, it's so much easier to come up with a $250 out of this paycheck, $250 out of this paycheck.
Yes.
Or
So
round
much
it up
easier.
to 300 each.
Yeah,
paycheck.
that's- yeah.
Then you're
No.
getting way ahead.
Heck yeah. Oh, it'll snowball. It becomes a snowball effect without even trying. You have a $500 payment, you pay 2 weeks early, and then the due date, right? And you keep cycling
Exactly.
without paying more. You end up paying off that loan faster. And a lot of people don't realize that. And banks hate it. I've had numerous
Yes.
banks like, wait, why are you trying to set up biweekly? And like they were like trying to advise against it because they're not making the same interest as they projected that they were going to make. When you pay that way. And if you're able to tack on an extra $25, because adding another $25 out of this check versus that check, and to get ahead, you'll pay off the car years faster, months faster, without even trying hard.
Yeah.
So it's about paying smarter, not harder. A lot of
Yes.
people, I've seen a lot of the Hispanic community, and this is why I've tried to coach them, and they, it's 50-50. Like some will be, oh yeah, that makes sense. And then you have to like really break it down. But most people actually, it doesn't even matter. But this is Hispanic community. And they'll be, well, I'm just paying an extra $50 at the end of the month, but they're letting the interest accrue all 30 days, and then they're throwing on an extra $50 of principal, $100. It would have been way smarter to
And
pay
they
every
don't
2
understand
weeks.
that,
Yeah.
and that you actually have to break it down. I've literally broken it down, written it down, and showed it to them. Gone on Zoom calls and said, "Look, this is what you're paying in interest. If you pay it off this way, it's going to benefit you a lot more."
Yeah.
You know, and the same thing with credit cards. I tell people, pay everything with a credit card. Pay it off at the end of the month. Your debit card is not getting you anything. anything. You're not, you're just, so like all my gas, my electric, all my bills get paid on one credit card. At the end of the month, I pay that off. And I either get, if you like to travel, you get a travel rewards card. If you you want cash back, you use a certain credit card. But a lot of people don't understand that. And when you learn financial literacy, you're able to stack things like that and make your money go further.
It's almost like a game, right? The credit system. I mean, if you pay off a car loan, your credit score typically goes down because you no longer have that car loan.
Mm-hmm.
Yeah.
If you don't have a mortgage, you don't unlock the full potential of your credit, right? Because I understand that there's three types. There's installment, revolving, and real estate, right? Mm-hmm. Is that correct?
Yes.
Mm-hmm.
Okay, so yeah, I understand that. And if you're missing one of them, then that's not giving you like your highest score possible.
Yeah.
And the number of inquiries will also affect your credit. I mean,
the way it looks, yeah.
Yeah, banks will turn you down for having too many inquiries because they think you're
just applying.
You're unstable, or you're
not financially secure, basically.
Because they look at it like you're maybe getting into a financial crisis because you're just applying and applying and applying. That's why I sometimes recommend people to go to their credit unions and their banks and get pre-approved for a car before, because some dealerships, I mean, I've seen credit reports where there's 30 inquiries and I'm like,
we see that. We know everywhere they apply.
That's one thing. So Johnny and I both have a finance manager background in dealerships. Mm-hmm. And I do want to say, I think that's what's going to make this a great partnership because we understand credit very well. But yeah, definitely, one of the things we used to hate at new car stores because we made an income off of selling finance products was when a customer comes in and says, I have an option or I have a pre-approval with my credit union. I want an option contract. Now we love those because we own and operate a used car independent lot.
Yeah.
And we don't get the same, benefits or privileges that new car dealerships get. For example, a new car dealership can mark the rate up. More often than not, we can't.
Okay.
Mm-hmm.
And also, the bank's charging us a fee of $700 to $1,100 to do the deal with them. So we actually prefer people coming in with a pre-approval from their credit union, and that helps us because we capture more or we lose less money.
Mm-hmm. And it could potentially get you a better deal. There's been situations where they come in with the loan or for a vehicle, we submit to our financing as a backup, and our lender's asking for like a $1,300 fee. Meanwhile, we could go through their lender that they have already pre-approved through and
give them that discount.
Give them a discount. So I'm able to save them money on the price of the car, and they could go through their credit union, and it's still the same deal for us. It helps them help us.
So is that why, like, when I went and just recently bought a GMC, and I had my pre-approval, and they're like, oh, let's let it run. We might be able to get you a better rate. Let us run your, and I was like, no. I already have a pre-approval. This is the amount.
Did you go to a new car store?
Yes.
Which one?
It's in Temecula.
Okay. Temecula Buick GMC?
Huh? Yes.
I used to work there. Yeah.
Yeah.
How
this is before we partnered.
Yeah.
Now you guys know.
Now we know.
I worked there for, what was it, 2012? Yeah, 2011, 2012.
Okay.
Me and John Unruh. One of my main guys.
Wow.
Yeah.
Okay.
So this guy, John Unruh, he's a great guy. He's like 75 years old. He works for us from home, but I met him there at Temecula Buick GMC.
Okay.
Nice.
Yeah.
Small world.
It's changed hands many times. So it's not the same owner or the same operation, but yeah, that's
so cool. I was really frustrated with this because I thought it was going to be easy in and out. I already knew which car I wanted. I saw it online. I picked it out. I figured, okay, I'm not going to spend 6 hours at the dealership.
Wow.
And you spent
probably 7. I left. I had my own loan, but they kept trying and trying, and then they were trying to sell me their gap there, and I already had it with my credit union. I'm like, I don't need it, and they're like, but if your credit score is what you're saying, we can get you a lower rate. I go, you're not going to get me a lower rate than I think I got like 6 or 5.9 or something with Navy Federal.
That's the lowest.
And I was like, there's no way.
Their hope was to essentially they call it capturing the financing, because even if they could match the rate, the bank will pay them a flat. Like if you're financing $30,000, they can make a $300 flat essentially on that loan. So it benefits them.
Gap for $1,500 opposed to like $300.
And their warranty,
and I had gotten all that through the credit union because I didn't want to deal with any of it.
What credit union?
Navy Federal.
Oh yeah, they're the best.
You can't beat Navy.
Yeah.
I recommend people go through Navy.
Yeah, and that's
are
why I
the
tell him,
best,
you cannot.
biggest
And
credit
then
union.
he's like, "Oh no, we can get you military. You're not going to get me a better rate than what Navy Federal did."
Right.
No, that relationship's valuable.
And
I love Navy Fed.
Yeah, I
They're
love
my
Navy
favorite
Fed.
credit
Everything,
union.
my mortgage, everything is through Navy Fed.
They helped us. They helped us sell countless cars.
Yeah, we probably get 2 or 3 Navy Federal customers in a month.
Yeah, and we hope you more.
They refer us.
Yeah, see, and that's amazing. It's a great relationship to have. And yes, they do check your credit. Obviously, they do have credit guidelines, but they help the military. They help people. You know, there's a recovery loan that they have to start doing to build credit history.
Yeah.
And things like that. So that's why I love
Let me
Navy Fed.
ask you this: knowing what you know now, what advice would you give to 18-year-old you on the credit journey?
18-year-old not
Financial
to apply
literacy.
for every credit card possible and go on a shopping spree. But I think that's every girl's dream, right? For me, it was like, back then was the Coach bags and everything else. And I just told my age. So, but it's just to learn it. I struggled so much, but it also built me and built the character that I have now and being able to help people. If I didn't go through what I went through at 18, 20, and, so forth, it wouldn't have taken me to this place that I am, to build the company, to be able to help people in their financial journey.
Wow. What about you? 18-year-old you, what are you going to tell yourself?
Along the same lines, I love fishing, something about me. So
Okay.
not, opening up a credit card and, just going over your limit and not paying them on time, that kind of really affected me.
Wow.
In the future. Yeah. That kind of really affected me for a long time, not paying my credit cards on time. And that comes back down to financial literacy. That's something people are not really educated on.
So let me ask you this, a follow-up question. It affected you for a long time. Is it true that on average it takes about 7 years for something bad to fall off of your credit if you make a mistake? Unless they're using your program, or sometimes you can
it's not something that's going to happen overnight. It's a lot of different companies. I've had people say, oh, this company can get me a full sweep in 30 days. And realistically, it takes anywhere from 6 to 24 months,
to fix your credit.
To fix, exactly.
To get it back where it is. But generally speaking, legally, you can't have something on your credit for no longer to 7 to 10 years, depending on the state that you're in. 7
to 10 years. Okay.
Yes. So like bankruptcy here in California will stay on your credit for 10 years.
Oh, wow. I didn't know that.
Yeah.
I thought it was all 7.
No, it's 10 years.
10 years for BK.
For BK.
Yeah. Wow.
Late payments are huge. People don't understand that.
What's the difference between the BKs? I know there's like a Chapter 7 and a 13, right?
So a Chapter 7, it clears out all your debt.
Okay.
A Chapter 13 is they will consolidate, almost like a consolidation loan. They take everything up. You have to pay the court a certain amount before they release your debt.
Oh, okay.
So you have to pay that's if you want to keep your home, keep a certain vehicle. A lot of some big businesses will file Chapter 13 because they're still able to keep their business, but they have to pay off a certain amount of debt before it is discharged through bankruptcy court.
Okay.
So
that's
so
good
it's
to know.
huge.
So 13 is probably better on the record then for bankruptcy, or
so if it really depends on the situation. It really depends on the situation. If it's a lot of credit card debt, medical debt, a lot of just personal debt, I would probably recommend a Chapter 7 because it just wipes the slate clean.
Everything, yeah.
And then you just start rebuilding your credit. But again, a lot of people use bankruptcy just to, start over. And that doesn't help either. You have to build a financial plan ahead of that and what you're going to do different.
How long after a bankruptcy does it take before someone can start applying for new credit and potentially getting approved for like a credit card or an auto loan or even a home loan?
So I recommend after you're discharged with your bankruptcy that you go to your local bank if you still have ties with the credit union and get a secured card. Have that secured card
immediately after.
Yes.
Okay.
So within 3 months of being discharged, go get a secured credit card,
To
build
start
on
building,
that, and then you make 6-month payments or 6 on-time payments, and then usually they will change that secured credit card to a credit limit credit card, and that's how you're going to start building. There's some places that car dealerships that will approve you with the bankruptcy. It just depends what kind of programs they have to offer. Home loans, you're probably going to have to wait 12 to 24 months, depending on what kind of loan you're using. If you're
Home
using
loans,
a VA
FHA
loan,
or-
it's probably 12 months.
I mean, I know we get a few people coming in, here and there that have a recent BK, and we're able to get them approved. So, I mean, that's kind of good, right?
That's a
Yeah,
plus
no,
because I
absolutely.
know some car dealerships will not touch you
No,
for,
usually they'll have come here from several other dealerships.
Yeah.
And we reach out. They seem like they've been defeated, stressed out, not really expecting to get approved. And when we give them a way to go, and we basically try to help. That's why I think we're such a good partner. Is because we are not just trying to sell you a car and be done.
Exactly.
We're trying to have like a relationship. That's why we, partner with the service center, tire shop, because those are things in the future you're going to need. You don't just buy a car and then you're never going to do anything else again.
Exactly.
See, and that's amazing. I don't know a lot of car dealerships that do that, right? They're always out for themselves. And obviously, we're all in business to make money. But if you're out actually helping the community and helping your clients, they're going to be clients for life.
Well, yeah, and speaking of which, a couple of things I want you guys to know, and I've talked about this on my other podcast, but for those of you who haven't watched all of them, a couple of things we've done. For example, the first year we started Inside Car Guys, we probably spent close to $100,000 after the sale when we didn't have to, post recon, right? Fixing someone's car after we sold it to them. So I can't tell you how many engines, transmissions, or just like little annoying nuisance stuff that I fixed for customers after I sold them the car. In the state of California, and these are $5,000 cars. Sometimes I spend $2,000 or $3,000 on an engine or transmission. I mean, the most recent one, I sold a 2018 Toyota Highlander. I sold it for $18,000. It was like a nice one, a XLE, and the transmission went out, and it had low miles. Like the car didn't have the SUV. It didn't have that many miles.
Yeah.
But the customer bought the car. He said, "Hey, the transmission's bad." Took it to Toyota dealership. They quoted him $10,000 to fix the transmission. I got it done for $3,000 and I paid for it. And I loaned him one of my brand new Tacomas.
Wow, that's amazing.
Yeah.
I mean, brand new car dealerships won't do that. If my car were to break down right now, they wouldn't do that for me. And
So when I worked at Toyota with Johnny, and I can't tell you how many times a customer would come back in and they're talking to me because I'm the guy who did the final paperwork. And there's a big issue with the car, and I go to the managers, and they're like, "Yeah, the car's sold as is. We can't do nothing."
Wow.
Did they buy a warranty?
Time again. Yeah. Did they buy a warranty? And even if they did, the warranty doesn't cover everything.
Yeah.
But then these people are like, "Yeah, I spent my last money on the down payment. I don't, I'm living hand to mouth or check to check, and I can't afford to fix this car, and I need it for my job to get around." So, that's one of the main reasons I started my own dealership, is because now I get to choose. And yeah, I could have had $100,000 in my pocket. I made $0 that year.
Yeah.
But I could have had $100,000 in my pocket, reverse analyzing it, right?
Yeah.
Rationalizing it. And it's like, yeah, but I'd rather do the right thing, because some of these customers are like literally paycheck to paycheck.
Yeah.
They saved up $2,000 down payment in 3 months, and that's all the money they had. So I'm like, yeah, I'm going to fix your car for you.
that's amazing.
And you're going to
lot
have
of
a
people
great
don't think that way.
experience. And then the other thing we do is we donate cars to kids who age out of the foster system, or
That's
the system.
amazing.
Yeah.
Yeah, we teamed up with James Storehouse.
Yeah.
Okay.
So yeah, they go through the foster system. They nonprofit. They build them up, train them, help them get jobs, housing, clothing, everything. And then once they age out, you need a car, you get to work.
Yeah, there's two now. We Raising Hope as well. So two charities, and they both need cars from time to time. So we'll either go half with them on it or give them an extreme discount and lose money at the dealership. Yeah. And same thing, just like a regular customer. Oh, they have a problem, we'll go fix the car for them.
That's amazing. That's, you don't hear a lot of dealerships, even these big dealerships, and I was just going to say that. And
I've never heard of a dealership doing this, but it's more about us, right? Who we are as people.
Exactly.
We're going to help people out. Johnny and I sold a car once through the broker service. And it was this elderly lady who just had, was it knee replacement or hip replacement? And she just moved from like Arizona or something. Yeah. And her house was like she had just moved. So everything stacked like floor to ceiling, all these boxes, and nothing was unpacked, and she couldn't move the heavy boxes. She's by herself. So right after we sold the car, I spent about $1,000. I hired a team of people, Johnny's kids and their baseball team members and whatnot. So I was able to teach the kids responsibility and also give them a job, and then also help this lady. Yeah. So they spent like a whole day over there helping her set up her house and moving the boxes around. And it was just, because we want to do nice things and give back. And, like you, right? You want to give back and help
back
people.
To your community. That's what it's all about. Yeah. It's
so,
I know they still remember that. They talk about it because she had cats and stuff. And they still talk about that experience. They're there with their friends moving all the boxes. Yeah, it was crazy. It was like she could literally just a wall. She couldn't even like barely get in her house or even walk around. So it was cool.
Wow,
I went over there to sign up the paperwork. I was like, man, we got to do something for her. Like this is, this is a bad situation. And it's like if you're in that situation, right? Someone comes along and does that. Same thing as the kids, right?
Yeah.
If you don't have a family, you don't have a support system, and you're trying to get on your feet and start your life out and have a job, it's like, what's better gift than transportation, especially in California?
Yes.
You need a car in California.
Oh, yeah, you can't get by. Yeah. My brother-in-law moved to Seattle or something, and he sold his car because the public transportation there's so good. Yeah. Here you got to have a car.
There's no essential way you can get around without a car. It's not New York or, like you said, Seattle. I've been to Seattle. I mean, even there though, I still think you would need a car. But I mean, I guess if you're central in Seattle.
It feels like Seattle lately with all the rain.
Yes, it does. It does not feel like California.
Oh, yeah.
Yeah. But yeah, it's been great having you guys. 1 second. What time are we at? 56. 56? Cool. Yeah, it's been great having you guys. And, we look forward to a partnership where we can, not only can we refer you guys clients, who buy a car from us and help them, refinance and get a lower interest rate. And then also help your clients get into a car when they're ready. When they're ready.
Definitely. Yeah. I mean, that's a great partnership. I can't, thank you guys for having us on and look to doing, business and helping out the community together.
Yes, definitely. And it's been great having you guys on the show, and we look forward to partnering and
I'm excited. Yeah,
helping people with their credit.
Yeah,
I know Johnny's excited about it. That's literally what we tell everybody. I mean, we never had a partner like you guys to help them. And a lot of our clients, they definitely need that financial literacy aspect of it. Yes. Of how to do it and what to do.
Yeah.
And then, it really sucks when I see interest rates in the 20s. Yeah. Or even the high teens, especially nowadays. Yeah. But, some of it is what it is. And it's just like you, like my first car, I paid $17,000. I worked at a Honda dealership. This was 2005. And I paid the car was $17,000. And I ended up paying like $33,000 for the car with the interest.
Yeah. That sounds like my first car.
16 or 17% interest rate.
Yeah. No, same with me. Same thing. I bought a Scion XB brand. I think I was like 15% interest with their first time buyer program. And it was like double, basically. Almost the exact same thing.
Ford Focus, but same thing. Yeah. I mean, it's crazy. But yeah, no, we're
But
here
yeah,
to
I
help.
mean-
And, you know, thank you again.
No, it's gonna be a fun partnership.
Yes,
Yeah.
definitely. Looking forward to it.
Yeah,
yes.
great having you guys. So till next time,
Yes,
stay tuned
thank
in
you.
and appreciate you guys.